Okay, my beautiful friends, sit back and relax because this freak show, again, if you want to believe it or can possibly believe it, just got even more freaky. Thursday, February 2nd, 2023. What am I talking about? You probably know already. Maybe you do, maybe you don't. The U.S. 10-year yield is in a nosedive right now, a freaking nosedive, meaning it has dropped significantly. The MMRI, just checked it a nanosecond ago, 211. We're going below 200. I have no doubt at all in my mind relatively soon. Now let's talk about the setup here because it's very, very interesting. Yesterday, yet again, we get a 25 basis point rate hike to the federal funds rate by the Federal Reserve. Okay. Overnight, we got the ECB with the 50 basis point hike. Bank of England, same thing, 50 basis point. Meanwhile, global bond yields are dropping precipitously, including the U.S. 10-year yield. So let's put this together. Let's put this together real quick because it's astonishing to see. Central banks are charging more for the debt they're issuing to the world. They're raising rates, okay. But meanwhile, global bond yields are dropping. How about falling off of a cliff when you want to look at the 10-year yield? So how is this phenomenon occurring? Well, you know already. You know already, and it's in your freaking face. This is central banks buying it all. They're buying more. Okay, all of this off balance sheet, you know how it works. People, there's no other entities on the planet, off the planet, no aliens or anybody else is buying all this debt. When central banks buy debt, yields drop. Okay, that's how it works. No one else is buying this debt. Nobody. It's central banks, and you can see this in real time. It's in your face. What does this mean? It means this market is going higher, much higher. Michael Burry, dude, you got it right once and in a big way. I'm not going to take that away from you, sir, but you're wrong here. This stock market is going monumentally higher. And why? Because central banks are buying it all. They're buying it all, everything, including the stock market, okay? What does this mean for other assets? You got Bitcoin here higher, near 24,000. You got silver up over 3.6% right now. Gold catching a bid here. Crude oil is relatively flat right now. Is under actually a tiny bit of pressure. Commodities for the long run, people, you know where to go. In aggregate, okay, if you understand the flow of cash through the markets, it's a no-brainer. It's a no-brainer that you need to be in hard assets, physical gold, silver, platinum, palladium as well. Silver, my favorite asset of all time, but commodities too. Commodities are priced in dollars. Okay, I think this is pretty much established. We can all agree on that, at least for now. Okay, now understanding that, if we also realize another phenomenon that's occurring here, massive currency devaluation on an unprecedented scale. This is why you're going to continue to see inflation rise. Again, look at the mainstream propaganda ministries. They're trying desperately to convince you that what you're seeing with your own eyes and in your pocketbook is not real. They want you to believe that there is a miracle occurring, that central banks, they're getting it right. They're doing the right thing. They're in a battle. They're in an ongoing battle to fight inflation. Really? No. They've gone out of their way to create inflation. Okay, so now they can charge more for the debt they have issued. Do you understand what I'm talking about here? Look at every single central bank. I don't know, let's just pick three from today. Bank of England, European Central Bank, Federal Reserve. Are you trying to tell me, anybody out here, that these institutions were completely unaware that their money creation binge since the last meltdown was not eventually going to lead to this inflationary event that we have? Meanwhile, you and I have been well aware of this for years. We all knew this was coming. They didn't know it was coming. And they want us all to believe that this just happened out of nothing. Meanwhile, there's no accountability whatsoever. Again, let's put this together. These institutions, these central banks, all of them, have inflated, and they continue to inflate on an unprecedented scale. Now they're trying to convince us that they need to charge more for their product. We all have to pay more for it. There's no public outcry. There's no revolt, no revolution, no loving, caring representative anywhere in the world that is saying, hey, you know what? Why is it that we, the people of this freaking planet, have to pay for the so-called mistake that central banks have made by allowing inflation to manifest itself like this? It's unbelievable here. Now they want to charge us more for the product that they're issuing to the world. You can't make it up if you freaking try to, but that's what's going on here. So anyway, that's the story this morning. 10-year yield in a nosedive, global bond yields falling off a cliff, despite the fact that central banks are raising rates. How does that work unless central banks are in here buying? There's nobody else buying the debt. When they buy the debt, yields drop, and it's in your freaking face, all right? U.S. dollar this morning, relatively flat. As I said, MMRI did come down. Now, with regard to economic news, people, look this up for yourself. Despite mass corporate layoffs, with more coming, okay, they want you and I to believe that first-time unemployment claims came in way better than expected, much better than expected. Why? You see, they're trying to sell you yet another lie that our illustrious imbecile president is doing such a great job. Oh, and he's going to come out and tout this number today. Oh, yeah. It's all fake. It's just all a mechanism here. Distractions, deceptions, propaganda. You know this. And people know the truth when they hear it. Is this making sense to you, what I'm saying? It's an incredible situation here. Just real quick. Just in case they take me down off of YouTube, I will be placing all my videos on or in my free newsletter. There is a link in the description of this video to my newsletter. So if you feel like I do and that one day they're going to not allow me out here anymore, I'm surprised I'm still out here, that's where I will be putting my videos in my free newsletter. Please, if you have not, as of yet, subscribe to my newsletter. Link in the description of this video. They can't censor me. See, here on YouTube, I used to be able to say things like S-H-I-T and certain words you can't say anymore, this thing or any of that. You can't talk about this out here. But in my own newsletter, I can do whatever the heck I want to do. I can say whatever the heck I want to say. I know a lot of you really want me to stay out here on YouTube. Believe me, I've heard from all of you last night. When I posted last night in my newsletter, people get involved here and start, maybe looking forward to me posting here my videos in my newsletter. People were like in an uproar. They're like, no, stay on YouTube. Look, it's not really up to me. I'm already being censored here, okay? So it's up to you. You want to follow my work or you don't? Up to you, like I said. Subscribe to my newsletter, link in the description of this video. Now, another announcement. I am back on Twitter by popular demand. People have been hounding me, pounding me. Greg, get back on Twitter. Greg, get back on Twitter. So if you want to follow me on Twitter as well, link in the description of this video. Anyway, so that's where we stand this morning here. The story is not the stock market, okay? Futures right now are actually that's not true. Dow futures were slightly lower. NASDAQ futures way higher by over 1%. S&P futures also higher. But the real story here is global bonds. It's the drivers of this market and this incredible phenomenon that's occurring. Let's think about it again. Central banks raising rates. Bond yields nosediving. Who's buying all the debt? Who's buying it, people? You tell me, because it's so obvious who's buying it all. And, central banks, in my view, have now begun a new phase of debt buying. And this is going to outpace anything we've ever seen before. Again, what's the backbone of this here? Maintaining the illusion of liquidity, of stability here in the global debt market, which is a ticking time bomb. And more effort has to be put in by central banks to maintain this illusion than ever before. Liquidity in this market is drying up, meaning the debt market, which is the driver. And this mechanism must constantly and relentlessly be fueled with more and more debt. And what are central banks doing now? They're, again, expanding their asset purchases. You're not allowed to know this stuff here, meaning they're buying all the debt and they're also buying the stock market. At the same time, they got to use the mainstream media to try to convince you that what you're seeing is not real and central banks are in a battle. They're fighting inflation. Meanwhile, they're doing nothing of the sort. They continue to inflate, and funding wars and vaccines and everything else behind it is all part of that mechanism. You all know that. So keep your eyes on the debt market. I will keep you well informed on this here. Keep your eyes on the MMRI. Michael Burry, I would love to talk to you. Please feel free to contact me. I'm an easy guy to get in contact with. I want to know what you see here, because the drivers of this market, Michael Burry is warning everyone, get out of the market now. Get out of the market now. I think he's dead wrong. I think this market is going much higher for a lot of reasons. You know that central banks aren't done. They're not done inflating. They're not done creating dependency on the system. And that alone right there should tell you that they're going to continue to prop up the market by buying all the debt. This is a new phase, people. And I really believe within a relatively short period of time, we're going to witness the MMRI drop below 200. Let's see if I'm right. All right. I love all of you from the heart. I mean that. Please subscribe to my newsletter in case they take me off YouTube. Okay, you want to have contact with me? That's how you're going to find my videos, in my newsletter. Link in the description of this video. You want to follow me on Twitter? Link in the description of this video. And I'm going to ask you again, please share this work. People, big shout out to those of you who support my work. I can't tell you how much I appreciate you. It's such a small percentage of you, but you know what? That's fine. I love all of you, whether you support my work monetarily or not. You know, look, a lot of you can't afford it, and I got that. You can't afford $5 a month. I understand that. It's a very bad situation, but at least share my work. Get it out there. That's free to do, okay? So there's no excuses there. And as I said, 9% of you share my work. 9%. If we could kick that up to maybe 20%, if 20% of you, just 2 in 10, would share this, we can make a bigger difference in the world. I can't imagine where you're going to find this information out anywhere else. I know there's a couple of other YouTubers that are really working hard to get this message out there. Alaska Prepper, the George Gammon, and Nobody Special Finance here. There's a lot of people trying to make a difference out here. Liberty and Finance. You know, these are people you gotta watch. Gerald Salente, obviously. You know, they're really trying to get this stuff out there. I'm sorry if I'm leaving anybody out here, but there's a lot of good stuff. There's a lot of people trying their hardest to raise awareness, and that's what we need to do. We need to raise awareness, and you're all a big part of that. All right, look, I'm out of here. Love you a lot. Please share this. I will see you later. Thank you to those of you that do support my work. I'll see you at 10 a.m. Pacific Standard Time, 1 p.m. Eastern Standard Time for my live midday market report and my big Q&A. It's not so much about the market report. It's about you and I interacting. Come up with questions. What do you want to ask Greg Mannarino? All right. I want to read those comments in real time and interact with you in real time. I want to get to know you better. I want you to get to know me better. And I'm sure we could come together on this whole thing because, again, there are so few of us that understand what's going on here. It's a natural selection process. I really believe that. And Michael Burry is going to be correct at one point. A meltdown in this market on such an a biblical level is going to occur. On a biblical scale is going to occur. It's just not going to occur now. There's no way that Michael Burry is right in the short run. No way at all, period. With central banks managing the entire market, they're buying it all. All right? Love you a lot.